Good morning and welcome back to Almus Market Mornings. A special episode is what we are recording today on account of the presentation of the Union Budget and the markets being open to address the commodity markets melting and where we stand on the MCX with respect to this crash. Well, good morning, Jayaram sir. When was the last time you saw such a fall and where do you see the commodity markets going from here?
Good morning, Eshan. Welcome all to this special coverage ahead of the budget. Uh, because there are far too many things to cover. We have thought about covering the Friday events and the commodity markets today, and tomorrow we'll most likely focus on the budget and the implications for the Indian markets as well. Yes, Ishan, I have never seen this type of movement in commodities. Yes, while the up move itself was somewhat shocking, the down move has been indigestible actually. So it's something that unprecedented in my career as far as commodities are concerned. And the down move, particularly in MCX, is still ongoing. We are still seeing the prices in gold and silver locked in down circuit, unable to sell. They're only unable to buy. I'm sorry, I'm getting mixed up. So unable to sell, and so that I think is continuing. What is also happening is that the extraordinary rally had pushed them to such highs that market got extremely overbought and caught very badly on the upside. And now we have seen silver down as much as nearly 40%, gold down nearly 20%, and huge amount of selling pressure in the international market. Couple of triggers, but I wouldn't say there would have been triggers if the market was not in such a technically overbought condition. Dollar was stronger on Friday after stronger PPI, and some of the data from US had been stronger. The dollar had come off, rather recovered strongly from their recent lows, after breaking the 96 level also. Then there was this appointment of Kevin Warsh as the uh, chairman to succeed Powell after he lays down office in May. And his appointment is seen as quite surprising. Market was looking forward to someone who is more dovish, known dovish at least. And Kevin Warsh has been, somewhat hawkish in his earlier stints. And he was in fact opposed to QE and all that. So now the market is not sure what kind of approach he will have on the monetary policy. The market played cautious note by selling the currencies, and even the stock market got sold off, and that added to the pressure on the commodities because, as I said, market was already in a highly elevated state. Prices, while fundamentals were strong, they continue to be strong. The majorly one-sided positioning at very high levels was the cause for this unwinding. And once the crash started, there was no stopping. And in fact, on a record basis in MCX, we saw 5 consecutive down circuits for silver, and something that people would remember for a long time as a historical event. So what's ahead? See, the fundamentals have not changed. Silver, for example, is led by huge industrial demand, and the supply is not matching the demand that we have, had. Even now, I would say, well, the MCX prices keep going down, the physical prices would be even higher. So I think once the positions get somewhat, come to more reasonable levels, and after the margin calls have been, satisfied and all that, I think markets will come back to normalcy. Could take a couple of sessions, and that will be when I think the genuine buying will happen. I think people who have been missing the boat, they will be ones who will enter at levels at somewhat lower levels, something like 1,30,000 on gold in MCX, or silver prices around 2,50,000. These should eventually become very good levels where you would be going long, for these precious metals for a longer horizon. But right now, market is overwhelmed by the down move, which has necessitated forced liquidation of long positions. That's the main thing. The forced liquidations have been the driver behind the prices coming down so much. As I said, I think it's a matter of time before market comes back to normalcy. Was on Friday. We also had, as I said, several events that was determining the market's direction. Data from US on PPI was much stronger, almost on all the counts. So the inflation looking higher meant that the rates will not be cut immediately. Although market still expects 2 rate cuts this year, the probabilities are much lower now. We also had a couple of data from Europe, like the GDP growth in Eurozone beat expectations. At the same time, inflation from Germany was higher than expected. Recently, we have also seen many data points from Europe, including the consumer confidence, economic sentiment, industrial production, all of them looking up. Really, Europe is looking up in terms of the economic picture. We also know that Europe has been signing a couple of large trade deals, one with India and another with the Latin American countries. So uh, I think the euro's fall was a correction of the steep rise. It went to 1.2050, a new high for the last 4 years. And Japanese yen also, on rumors of rate checking by Fed and BOJ, had slipped to 152 half, and then Fed had denied that they had done anything in the market, so it has retraced. But fundamentals dictate that Japanese yen should be stronger. There will be more rate hikes by Bank of Japan in this year, as they don't want yen to weaken much more, because that will affect the consumption, and also the inflation will be higher again. Commodity of currencies, of course, did not fall as much as one would expect on such breakdown in commodities, because they were just rising. They have not been on a tearing rise like the basing commodities. So I think there's been a healthy correction in the dollar to the upside. So this should eventually, in my view, the cyclical factors are in favor of the dollar, but the structural factors are not. Therefore, the dollar will continue to be weaker going forward, irrespective of where the monetary policy goes as well. And we also had, the geopolitical news on Iran, where U.S. Naval forces are said to be getting closer to the region in Iran, and then some reports indicate there were explosions in Iran as well. So the geopolitics giving some safe haven bit to the dollar. There is a news that from January 31st late night, US government has been shut because some of the spending bills have not been passed by the Congress. Although it is expected that the senators would meet on Monday, and this will be a very temporary thing, but market again cautious. The reports from tech majors have not been as good, so the fears about the tech AI related rally being overdone or over valued is also slowly getting realized by the market. So all in all, so some factors have been working in favor of the dollar. That's why it has been higher. And I think eventually I see with the more positive news from other economies. That is the key thing. It's not about just the negative thing about the US. It's also the positive that things that are emerging from other economies that will keep the dollar on the defensive. Yes, so the move lower for the dollar will be gradual, because even as we have shared earlier, also European officials have been voicing their concern about the sharper rise in the euro, because that leads to impact on their exports, and ECB may have to revisit their policy as well. I don't think they are going to cut the rates anytime in the near future. But as I said, dollar's fall will be gradual, but I think the underlying trend for the dollar will be definitely down. Commodities, gold and silver, I do expect them to recover eventually based on their strong fundamentals. For the rupee, of course, the currency has been relatively stable, although it stayed very close to the all-time highs. Relative to the bigger volatility in commodities and the broader dollar index, rupee moved in a very narrow range. But the fact that it has not responded positively to India-EU trade, which has been, called as mother of all trade deals, and then of course the India-US deal, about which also some positive statements are again emerging, it's not helped to the rupee or the stock market much. So I think there's much more needed for the rupee to make a stronger rebound. Um, I think what we are looking ahead to is two things. One is, of course, the budget, which is going to be presented in under 45 minutes, and within the budget, whether we have measures to get more foreign direct investment into India, opening up more sectors. That's one thing that the market will be looking ahead to from the rupee's point of view. Another is the fiscal deficit. If the finance ministry is able to meet the fiscal target and also bring down the target for next year, and that will be a major positive for global investors' point of view, and that can also support the rupee. And of course, if there is any change in the capital gains, which many people are hoping for, with India underperforming a lot in the last 1.5 years. It can support the stock market, but not sure how much it will support the forex, because foreigners have been selling the stocks not because of the tax angle, but because of their valuation concerns. So I think FDI will be keen to get the rupee back on some strengthening mode, and fiscal deficit will be something important from a global macro point of view. So I think we have the equities and the commodities market open today just to cover the budget, but not the forex market. So any impact from the budget on the rupee will be seen only tomorrow. Uh, and we have to wait for that to see. And yes, we have a lot of time to assess what the budget means for the rupee. And of course, in tomorrow's morning update, we will cover the highlights of the budget as well as the impact it will have on the rupee market. Thank you.
Thank you, Jayaram. So, and just to summarize, JK, who's been in the market since a really long time, still hasn't seen such a big crash and fall on the MCX, is still on, as prices are not normalizing with respect to the international gold and silver level. And five consecutive down circuits were seen in silver. This has been an event truly very hard to forget for the industry and has really made everybody really grounded. And the panic movement and forced liquidation has been the main driver for the prices coming down in the Indian markets. And it's just a matter of time when the markets come back to normalcy and genuine buying starts. Kevin Warsh was appointed to succeed Powell as the new Fed chair, and he seems to be a hawk in the past tense. So let's see how he handles the Fed rate cuts going forward from here. And the down move from the dollar will continue to be gradual as the underlying trend continues to stay weak for the dollar, and commodities are expected to reverse slowly from here based on their fundamentals. And when it comes to the rupee, we remained relatively stable, closer to the all-time high on Friday and on the brink of 92. And now all the focus is on the union budget presentation at 11 a.m. this morning, waiting to see if we see some flows from the foreign investors, and that could support the rupee. But we will see the effect for the same only when the forex markets open tomorrow. Thank you all so much for listening. I will catch up tomorrow with an episode where we'll be covering the highlights for the budget. And we'll catch up tomorrow with the fresh round of updates as well. Yeah. Thank you.